Hey, Mark, I'm here again with Mark Collingsworth of Ver Global. And my question now, first off, is how did Wall Street do this week? This is Friday. How did it end? How did it do all week? What's going on?
The market was better this week. It did pick up a little bit, but of course the tensions between China and the United States are starting to pick up a little bit. So we've seen a little pickup in gold. We saw a sell off last night in overnight markets, and we're going into a 3 day weekend. So people are squaring up positions because nobody really wants to be too long, and no one wants to really be too short going into a 3 day weekend.
All right, so what's the China element now here? You say that's still having an increased impact now. What happened?
Well, we had the Secretary of State actually said made some negative comments about Taiwan and how Taiwan's its own separate independent country, and it's not part of China. We've had problems where the United States is refusing to buy semiconductors from several of the Chinese companies, and because of those problems developing, it wouldn't surprise me if China comes back in the next several weeks or in the weekend. They're famous for doing things over the weekend and saying, "Hey, we don't like this deal. We're going to boycott a product, or we're going to stop doing business with the United States," and that's where the tensions are coming from.
And investors are worried about that, hence the dip on Wall Street.
Correct.
And also the markets, the Asian markets are having an impact too. They closed due to this that was affected by the China situation.
The Yes, the Chinese stock market sold off about 5% last night. That's caused the S&P futures last night. The U.S. markets also trade overseas. Those were down about 30 to 40 points last night, and of course they rebounded this morning as people were just squaring up positions going into the weekend.
But wouldn't just the high tech stocks be affected by this war with China?
It primarily will be the high tech stocks that would get impacted the most because of all the technology with microchips and software and things like that. But you could also see problems develop in other and consumer goods. Chinese are actually very large consumers of bourbon whiskey. So what would happen if the Chinese decide to stop drinking bourbon whiskey? What would happen to your Jack Daniels and your Jim Beams?
Where you're from, right?
Where I'm from, yep.
Okay. You better be stocking up then privately in case there's some kind of a situation with that. So this trade war with China, will it intensify? Will Trump ease back? What's going to happen? How long will it continue and how deep will it get?
I don't think Trump is going to ease back on it. The difference between this situation and previous encounters is that other countries are also kind of jumping on the bandwagon blaming China for the coronavirus. So is it possible that enough countries can actually, strong arm China? We'll have to see. But just 2 weeks ago, Australia wanted to open up an investigation into China's laboratories, and China threatened to stop buying beef products from Australia. And Australian stock market had a very rough week that week.
But if the European countries, if the West gang up on China, will China back off or will it just double down?
It depends on really how serious they are. In the past, people have always threatened China, but the second China comes back and threatens something back, everyone's like, "Oh, we can't do that with the largest economy in the world."
So therefore, it's still up in the air what's going to happen.
It's up in the air, and Wall Street doesn't like unknowns.
All right. So what else is going on with Wall Street that may have a negative impact in the next week or the next several weeks or month ahead? What's going to go on?
Well, this is kind of concern over the next several weeks to months. Is all the stock market activity that you've seen has been from the retail investor, the small investor. You can tell that the big institutions aren't buying into this market rally. And the easiest way to see that is normally when institutions like, a big hedge fund goes in, they'll buy stock in a 10,000 share block. So you'll see, 10 and 20 blocks of a stock being bought at once. That's 200 to 300,000 shares of stock. Here
Yeah.
over the last several weeks or 2 months, what you've seen share orders have gone through to buy one share of Apple, one share of Amazon, one share of Microsoft. That tells you that's the retail investor, not the big boys. So if all this buying has been done by the small people, what happens when the big boys decide to get back into the game? As one of my friends on Wall Street told me, he said it's just a matter of time when the day of reckoning is going to come that you're going to hear that ringing bell, and I'm going to walk out there on the floor and raise my hands and say, "Mr. Retail Investor, the lesson begins. short 10 billion shares of Apple at market.
And then,
The pain will begin for the retail investor. If you're also curious, Goldman Sachs actually did a study this week that a large majority of the stimulus checks that actually went out actually found its way into brokerage accounts like Robinhood, E-Trade. Just in the last 6 weeks, over 800,000 new accounts have been opened at retail brokerage firms.
so what also is going on with significant factors? How about the political situation, the campaign, the what's ahead for November?
Well, Wall Street likes to look at things, a few months in advance. So it's still too early for Wall Street to even be concerned with the election. But one of the things that has been discussed in backroom conversations is what happens if Biden actually wins. Biden's already threatened to, just today alone, he said it's time for Amazon to start paying taxes. There's a lot of companies out there. Apple uses tax loopholes through Ireland to avoid taxes, Microsoft, Amazon. If Biden gets elected, do you see a across the board tax increase on these corporations? And corporations are in the business to make money. If they pay higher taxes, are they going to fire more people? Are they going to stop expanding? That could be very bad for the economy if Biden comes in.
So, Mark, then if Wall Street thinks that the chances of Biden being elected are increasing even before November, before the election, that will also increasingly have a negative impact on Wall Street before the election. Is that correct?
Correct. If Wall Street is worried that Biden might actually have a chance of winning, you'll see weakness in the stock market anywhere between 2 to 3 months prior to the actual election.
So that'll again compound the current problems that we have with any kind of a recovery ahead.
That is correct. It sure will.
All right. So in the meantime, last question, Mark. What's your advice to investors now, considering what all we've just said about the stock market?
My advice is don't go chasing after these little no-name companies that no one's ever heard of, penny stocks and so forth. Focus on buying profitable companies and don't worry about what they call FOMO on Wall Street. That's the fear of missing out. There's always opportunities. Just be patient and let the opportunities come to you. There's a reason why Warren Buffett, who's called the world's greatest investor, is sitting on 65% cash right now and continues to sell stocks in this market rally.
So your investment is to your advice is to go to cash more?
I wouldn't necessarily go to cash. Even Warren Buffett still has roughly 45% of his portfolio invested in stocks, but those stocks are things that people use every day. Procter & Gamble products, Coca-Cola, things of that nature. Again, don't buy in the stuff that people can go without. People don't need to buy a new car every week.
But they do need to buy toiletries every week and other common household commodities.
That is correct. So stick with those kind of companies and companies that you're familiar with. I always tell people, if you don't use the products that the company sells, there's probably no reason for you to actually own the stock of the company.
That's some good bottom line advice. Very simple, but apparently very accurate. Mark Collinsworth of Vera Global, the CIO of Vera Global, thanks once again for giving us some advice on Wall Street today and what's ahead in the next several weeks, maybe even several months ahead. Mark, thanks for being with us.
Thank you.